Our top story: in the largest bank failure in the United States since 2008 in the global crisis that ensued back then. The fallout of this has rattled global markets. Shockingly, just hours earlier, the Silicon Valley Bank collapsed on Friday and authorities seized the assets of the institution. Something unusual happened. SVB employees received their annual bonuses. If sources are to be believed, these payments were made for the work done in 2022 and they had been in process days before the collapse. There are also claims that the California-based bank has been historically paying employee bonuses on the second Friday of March every year, and this could perhaps just be a coincidence. While the amount of payout is not yet out in the open, the bonus generally ranges from $12,000 for associates to $140,000 for managing directors, according to Glassdoor.com. In fact, SVB was the highest-paying publicly traded bank, according to Bloomberg, in 2018. The startup-focused lender, SVB Financial Group, was taken over by the Federal Deposit Insurance Corporation around midday on Friday. Now, employees of the fallen bank have been offered 45 days of employment at 1.5 times their previous salary by the FDIC. The bank had over 8,000 employees as of December last year. The SVB fallout is being explained through a number of factors: poor financial decision-making, inadequate communication to raise $2.25 billion worth of capital, that too after a loss of about $1.8 billion. Ever-rising interest rates due to aggressive policies of the central bank and rising inflation. But what is not being talked about is the role of venture capitalists. The situation went from bad to worse because of their role. Venture capitalists' overreaction to SVB's need for raising capital sent panic across the industry. These waves soon turned into a tsunami that could not be controlled. Right from Peter Thiel's Founders Fund, Courtier Management to Union Square Ventures, all instructed their founders to move their money out of SVB after its fall to raise capital. And all of this happened on Thursday. Rest of the industry followed suit, which eventually led to the bank being shut within 48 hours. But these are people who will be called right, as the SVB did eventually fail. What will probably go neglected is their role in SVB's downfall. Just days before the eventual demise, SVB ironically tweeted about being proud of making it to the Forbes list of America's best banks. Well, we know how that played out. SVB is known to serve customers across the world. Startups funded by American incubator Y Combinator are also impacted. Most of these, which have Indian founders, are now struggling for working capital. A third of these startups would not even be able to pay their employees in the days ahead. SVB is the default bank for most VC-backed startups. More than 60% of Indian Y Combinator startups had more than $250,000 in SVB. Now, the biggest risk for smaller or younger VC startups is that they do not have multiple bank accounts. Indian union ministers will meet with the Indian startups that have been impacted by this disaster. The Federal Reserve Board of Governors has called for an emergency meeting on the 13th of March. According to officials, the board will review and determine the advance in discount rates to be charged by the Federal Reserve banks. But the scale of loss of the tech industry can only be measured in time. For more on this story, we're now joined by Mark Brolin. He's an economist and geopolitical strategist. Thanks very much for joining us here on WION. Now, the, of course, bigger question is this event likely to undermine the broader banking system? Are we likely to see a bigger meltdown as a direct fallout of what's happened to the SVB?
I think you can see that this is probably not a Lehman moment, despite it's definitely a big crisis. And I think you can say ultimately that this has been naive optimism coupled with herd mentality that has led to this crisis. Because I think, and it also, I think also highlighted is the short-sightedness of the financial sector, in the sense that overexposure to as a radically low interest rate historically they have been radically low for a long time, and the bank's overexposure in that sector has been in a way, if you look at this historically, been a bit silly actually. But this is not a Lehman moment probably, because the bank is so much smaller than Lehman was, and it's the systemic risk it's not as entangled with other banks as Lehman, not even close. So possibly you can say this is more closer to what's happened in 2001 when Enron fell, because then it was one sector, the energy sector, which was severely affected, and the shareholders in that sector. And this time it's the tech sector with many shareholders affected. But I think the systemic risk, as mentioned before, is probably not close to as grave as it was when Lehman fell.
Also, the question that many are asking is it the fault of venture capitalists or the bank itself? Who would you blame for this disaster?
Well, the bank itself has to take the brunt of this collapse, because it's actually very strange to have. It's a cardinal sin of finance to have a high risk for actually modest gain, and that's what happened when they overexposed themselves to bonds. And it's actually very strange, because if you do have to take on high risk, you should do it at least expect a high return. And they took on high risk without expecting high return. So I think the management had to take the brunt of this. But as also mentioned before, I think there's a herd mentality in all this, that you get all these people on board during the salad days. They met in ski resorts and stuff like that, and everyone was talking up the chances, and nobody was expecting interest rates to go up. And thereby damaging the balance sheet. So it's a herd mentality, but at the end of the day, it's still the bank management that has to take on most of the guilt.
All right, Mark Brolin, we leave it at that. This is, of course, still a developing story, one that is likely to have massive repercussions in the days ahead. Thanks very much for sharing your perspective with WION.
Thank you.